Global stocks of metals are historically low and doesn't seem to improve in 2022. In the meantime, transition to green energy and electric vehicles is amplifying the demand. With that, we'll be discussing on global metal markets. Metal prices retreated in April and May as strict pandemic containment measures dampened demand in China. The easing follows record high prices in March due to supply fears after Russia's invasion of Ukraine. Prices are expected to stay elevated in the near term. However, amid the uncertainty around supply and historically low stocks, but weaker global economic growth is likely to weigh on prices later this year. In the longer term, the energy transition could have a renewed lift to the prices of some metals, notably aluminium, copper, and nickel. This demonstrates the World Bank's Base Metals Price Index, which is the weighted index of the prices of aluminium, copper, lead, nickel, tin, and zinc. Shaded area denotes the start of the war in Ukraine. Last observation is on 20th May 2022. Demand for metals has softened primarily due to the slowdown in economic activity in China, as lockdowns in major cities have clouded the growth outlook. Copper prices, the bellwether of the global economy, retracted significantly in May after reaching an all-time nominal high of more than $10,000 per metric ton in early March. China's manufacturing PMI dipped to 46 in April, its lowest reading since February 2020. Global auto production also fell sharply in April, largely due to the slump in China, while demand for electronics has slowed since late 2021. This demonstrates lead prices and car production in major markets. Car production data are seasonally adjusted. Major markets are China, Japan, Germany, and the United States. Last observation is in April this year. We can see that from 2020 onwards, both the car production and lead prices are being increased. However, as of the beginning of 2022, we can see that car production is being decreased. However, lead prices are continuously increasing. This depicts tin prices and Global Electronics Purchasing Managers Index. It's a survey-based measure of economic health. Readings regarding greater than 50 indicate an improvement over the previous month. Last observation is April 2022. We can see that this reading, that means electronics PMI, is being increased for some extent at the latter part. However, now it is being decreased in considering tin prices for a lesser amount. The surge in energy costs, however, has led to concerns around the supply of aluminium and zinc due to the energy-intensive nature of smelting. Aluminium prices surpassed $4,000 per metric ton in early March, an all-time high, while zinc prices reached a 15-year high of $4,500 per metric ton in mid-April. High energy costs have forced aluminium smelters in Europe to reduce output by an estimated 17% in 2022. Several zinc smelters have shuttered, including those in Italy and France owned by Glencore and Nyrstar, respectively, among the world's largest zinc producers. This demonstrates aluminium and Europe natural gas prices. Last observation is April this year. We can see that from 2020 onwards, both the aluminium prices and Europe natural gas prices are being increased. However, now both the aluminium price and Europe natural gas prices are declining as per latest data. Sanctions on Russia could lead to further supply disruptions. Russia, which accounts for 6% of global aluminium production, has lost access to key inputs due to sanctions. This includes two-thirds of its supply of alumina, a key input to aluminium production, due to Australia's ban on alumina exports to Russia. Russia also accounts for 6% of global nickel supplies and 20% of high-grade nickel for batteries. Russian mining giant No Nickel has been incurring supply disruptions following sanctions. This demonstrates or depicts Russia and Ukrainian metal production based on 2021 production, except for iron ore in 2019 and steel in 2020. We can see that across all the metal classes, Russian Federation is leading in production. However, in tin and copper, aluminum, in Ukrainian production, they don't have that much of production in such metals. Inventories for most metals have reached historically low levels. Inventories at exchanges have declined to historically low levels as elevated energy costs have choked the supply of refined metals. Aluminium and nickel stocks have fallen the most this year as they are among the most exposed metals to disruptions in Russian supply. This chart depicts inventories at metal exchanges, average of combined daily inventories at COMEX, LME, and SHFE. This data for 2022 is through May 20th of this year. We can see that as per the chart, nickel production or the nickel inventories are declining continuously from 2020. And same pattern could be visible for copper as well as aluminium. Ongoing mine supply disruptions pose further risks. Almost 20% of Peru's copper mine capacity has been taken offline recently due to labor disputes, while water shortages hampered output in Chile. Tin supply has been affected by issues with export permit allocations in Indonesia, as well as sporadic closures along the borders of Myanmar and the Yunnan province of China. Pandemic-related labor shortages in Australia have disrupted iron ore production, while adverse weather significantly curbed output and exports from Brazil. This chart depicts top metal ore producers based on 2021 production, except for iron ore in 2019. We can see that copper manufacturing context that Chile is the leading producer. However, in iron ore production, Australia leads, and nickel, when you can consider the production, Indonesia leads and Philippines and Russia follows. In tin manufacturing, China is leading manufacturer. Indonesia and Myanmar follows the pattern. Reference for today's presentation is from World Bank's blog by Chien and John, themed as Global Metal Markets. Thanks for watching.